There we go. So it's evident that it's recorded now. Let me just click on to, we'll admit more people in. Hi there, guys. Welcome, everyone. Thank you very much for your patience, especially, and sorry for the delay. Today, we shall start immediately right now. Thank you for joining my webinar. Now, today is the 24th of August, 2022, and we are on the Wednesday's midweek webinar by Breton, powered by Trade Academy, as well as sponsored by 10 Trade. Now, we will be discussing trades that we have actually looked at as of last week, also on Monday. And I think I will start off very quickly before we go on to the sentiments of the market and things like that. Usually Wednesday would probably be best for us to visit your current trades, or if you've got questions on your current trades as well as trades that you are planning on. Okay, so it's more troubleshooting as well. Your current trades would actually be good to actually do on Wednesdays or Wednesday session. Okay. Any questions excuse me, any questions before we proceed? Any questions from the traders on the floor? Perhaps you guys have got questions from Monday session before I go on to gold. Actually, I've got some important announcements to make in terms of some trade setup concerning gold, and then we'll go back to some of the major pairs that we have mentioned to pose some good setups, and it has actually marinated into the price action and various other areas of technical analysis as well. So questions, guys, or shall I just proceed with gold at the moment first? You guys okay for me to just start with gold? Yeah. Okay, guys. So there's been lots of questions, and we have actually looked into the possibility of gold's reversal as of Monday, meaning that it was on a downtrend, and then we were expecting it for expecting a reversal. This is a daily chart that has actually proven that a reversal has actually occurred. Hence the reason I'm looking at the daily chart to then show you how much it has actually reversed. As you can actually see, we are trading at 1750s area right now, 1751, 51 area to be exact. And we are looking at price action have actually been encouraged by buyers more than the sellers. So let's take a look at gold again, so I can then rewind that whole trend analysis, especially, and give you areas that you can actually look at and be aware of. So what I will do is just get rid of all these lines. We'll start afresh and we'll focus on price action based on closing price and opening price of mother candles, previous mother candles, as well as current mother candles if we have spot any. Now, this is gold on the 1 hour chart. We'll zoom out a little bit just to take a look at where the current candles are actually trading at this moment of time. As you guys can see, this the way the candles are moving, because they are in between the three lines, this spells for some unclarity or non-clarity of the trend. If you spot candles in between the lines, this is giving us a hint that the market could potentially be a little bit uncertain of the direction. So there may be a likelihood of prices moving sideways or not really sure whether or not to move to the upside or downside. Now, this is only on or based on the 1 hour time frame. Okay. Okay, let me just okay. So as of Monday, just to refresh our session on Monday and what's been mentioned about gold on Monday was mainly based on the expectation by the market as a whole for the US crosses or the US dollar to actually depreciate, mainly because of the cushioning of the, the government, the people in power, to actually reduce the impact and effect of inflation that is still going on. So with that, the expectation would actually be, for a lower rate of the US dollar that would actually then trigger the buying interest of gold. And that we have also mentioned that could be triggered from tomorrow onwards, when the Jackson Hole Symposium starts tomorrow, and it will be until Saturday. So this could actually then trigger and impact volatility of US crosses, of course, and also gold. Okay. So if you guys have got any questions as well, just type the little box and you can do that. So it is actually quite good for us in the midweek session to actually look at situation like this, when an instrument could actually be triggered by an event, a risk event. Like in this case, it is the symposium, the Jackson Hole Symposium that I've mentioned will start tomorrow. This is really important, very, very crucial. It could actually spell out trading opportunities, of course, risk as well, but trading opportunities for various instruments, in particular, the US crosses, of course. But because during the week we have got some very high impact news, or sorry, data releases, as well as speeches in the UK as well as in Europe. So Euro crosses, GBP crosses, as well as the US crosses are amongst the instruments that we could actually keep an eye on, be aware of the movements of volatility and liquidity as well. So let's take a look at gold at this very moment of time. As we've mentioned, 1 hour is giving us the hint of a sideways type movement, not very clear in terms of trend. But what I would like to also do is to also have the average directional movement index always on there, just to give you that hint and that confirmation that that trend is not there at this moment of time. Now, the 1 hour chart, because candles are in between all the three lines are moving sideways. On top of that, to confirm, the blue line of the ADX is also under the level 25. So there is no trend here, and there is no expectation of movements as well to strengthen the trend. And what is that trend? That trend is uncertain as well at this moment of time, because the current candles on the 1 hour chart are neither above all the three lines or under the three lines. But what could actually keep our minds as traders a little bit clearer as well is the way the three lines are actually moving. They're not moving to the upside or downside, but they're actually moving in parallel to one another, sideways. So you can see that this is sideways type movement of the three lines. So that's actually very clear that it's almost like a hint, a very strong hint of not doing anything for gold at this moment of time, especially for the shorter term, because then you'll get trapped if at all it's not showing you clear signs of a strengthening trend. Okay. All right. So that is on your 1 hour chart. So the 1 hour chart itself is giving you lots of hints already for the shorter term. Now we want to compare that with the 4 hour chart. Now, as you can see, even the 4 hour chart, the way the three lines are moving is not giving us a clear trend. But what retail traders would actually be looking at this moment of time is the movement of that single candle, right? So this is very tempting for traders to actually look at the current candle that is actually moving. So most of the time, they would actually be looking at the current candle and saying that, oh, it's an uptrend based on that current candle movement. Now, it should not be that way. It shouldn't be, the market's trend shouldn't be treated that way or looked at in that manner at all, because this will only confuse the trader and, causes the trader to be in and out of the market at the wrong timing as well, not understanding the overall impact of the trend or the trend's direction. So here it's clear again, we do nothing on the 4 hour chart. From 1 hour to 4 hour, It's already giving us that hint of uncertainty of trend. So whatever that is going on right here, we need to actually ignore it. We need to actually ignore the single candle movements or the single current candle movement at this moment of time, because it's just not giving us it would actually distract us and basically manipulate our views of the actual or overall trend of the market. Okay, so this is not going anywhere at this moment of time, in my opinion, when I compare 1 hour and the 4 hour chart. So then we continue and go on to the daily chart. Now on the daily chart, you can see it is the same thing. So in my views, I think the reasoning behind a sideways type bias movement of gold is only because the symposium has not started as well, and the mainstream media hasn't actually really marinated all the happenings onto the news, and it hasn't marinated to the public as yet. So hence the reason it is actually taking a little bit of a back burner type decision making, where most of the traders, I think, are actually, or investors are holding on to their current trade, not adding on to their trades, but also most importantly, holding on to any positions, new opening positions for gold as well. So it is like a sit and wait type scenario for now in terms of gold's traders, retail as well as institutional. So here, for example, if we're looking at the daily chart or even the weekly chart, let's say, just so that you get a better picture of the overall market, you could see that we've got support areas as well. And usually these three lines could prove to be strong support and resistance levels or zones as well. As you can see, all these ones here are support resistant, hitting onto one of the three lines. It could be either the 50, the 100, or the 200. So that has been very, very sharp as well, as you can see. And hence the reason I have chosen the exponential moving average as opposed to the simple moving average, mainly because of this very sharp bounce or even resistance level from either one of these three lines or EMA lines. And if I were to have the simple moving average instead, then it has proven many times before that it wouldn't be as sharp as what we can actually see at this moment of time with the exponential moving average. So just to recap, the three lines are the 50, the 100, and 200 exponential moving average. And I use that for all instruments that I'm analyzing. And I mostly use the candlesticks chart, of course, to do that analysis. Now, this is for gold. So if it were to be for any currency pair, then we would actually be looking at psychological numbers. As I've mentioned to you guys, we use the psychological numbers 0, 0, 20, 50, and 80 only for instruments, only for currency pairs, as well as oil. Now, oil could be the WTI or the Brent, and we have videos releasing soon on explaining how these psychological numbers actually work, and they usually work for entering and exiting the market only. Okay, all right, there we go. So now we have looked at the weekly chart as well. Now I would like to also look at the current price and the way the current price is actually moving, whether or not cutting through any major mother candles as well. It's really very, very important. So here on the daily chart that we couldn't really see on the weekly or the other time frames is the cut through of the current price on this mother candle right here, which is a bearish mother candle, right? And it's also on several other mother candles as well, like this one here as well, and also this one. Now, this is a very, very interesting analysis that we can actually make at this moment of time. And I would like to look at this mother candle right here, which is quite significant because this is on the daily chart. And I like to look at the current price on which previous mother candle's body that it has actually cut across. And sometimes when it cut across like this, almost like in the middle of this mother candle, then I want to pay attention to this area here. So what I would like to do is to mark from the opening price and the closing price of any significant mother candle. Now, in this case, let me just make sure that it's a slightly thinner line right here. So I want to mark this mother candle right here because I want to show you the power of mapping out zones based on previous mother candles as well as the current happening of the price and how the price at this moment of time, price of gold at this moment of time is at 1752 area or 1753. And it's cutting through some significant candle movements, and predominantly it's cutting through the body of bearish mother candle. Now it has a lot of messages there as well. So here I would like to first zone it up right here. So we know that we have got the what do you call that, current price is actually cutting through the bearish mother candle, previous mother candle. This was far back in last year in February. So beginning of last year, that candle base, that mother candle, bearish mother candle is based on. So as we go further, we can see that, okay, we've got the bullish mother candle right here as well, right? And as we go on as well, we could see that we have got another bearish mother candle right here where the current price is cutting through. We have another mother candle right here as well. And as we go on, we could see that this is probably a more prominent what do you call that, bearish territory as opposed to a bullish territory. But if I have drawn that zone based on let's say this area at 1772 or 1773 right down to 1733 based on that mother candle that we have drawn, right? The one that is here, right? The one that is in February, happened in February. We can actually use any other mother candle, but this one here seems to be quite significant, seems to be quite powerful movement of that body of that mother candle as well, right? Now, notice this, you have got a price drop from that top rate line, horizontal rate line, down to the bottom rate line, and then just concentrate and focus on this top line and bottom line. So once the prices fall from the top line to the bottom line, it always will go, take to the upside, right? So it went up as well. So it went up from bottom line to the top side. Now the next movement should actually be coming downwards and coming down from the top line to the bottom line. Now, if we go there, okay, it has done the bottom line right now, and then it went up again. Then it came through and came down, and then it went up again. Yes, and then for a long time, it came down here, it went up, it did come down here, and now it has a potential probability of going up again, right? So that is another way to actually measure when you have got a zone and a range of that zigzag movement between top line, bottom line, top line. So you will always have a zigzag going through there, especially when you look at current price cutting through mother candles, whether they are bearish or bullish mother candles. That actually is a sign of sellers and buyers are revisiting the previous price that they have executed the trades on. So sellers and buyers, they usually get drawn into price ranges that they have traded in the past, and especially if they are dominated by single bearish or single bullish mother candles, that means the buying or selling power has been present at the time, preferring certain price ranges to execute the trade, whether it is retail or institutional. Most often it's a combination of that, and maybe the power could come from institutional trading as well. So a lot of other people would actually see that as supply and demand area and stuff like that. But this is a manual, simplified way of actually using closing price and opening prices of mother candle, especially significant significant mother candle that we can actually visually, visually be aware of, right? So then this could actually prove a way for you to practically understand how to put a zone where the buying and selling power are, or in other words, supply demand. The reason why we cannot really use the theory of supply and demand is mainly because we are trading with CFDs. So trading with CFDs has got a different mechanics because we don't actually own any of these assets. So they are only price based, right? And you don't own the assets, so you can actually speculate the movements based on its prices only, right? So that's why it could actually be a very effective way when you are doing it in practice of using mother candles and marking the closing prices and opening prices of these powerful mother candles, especially, right? So now my rough guess here, based on these two lines that I have actually drawn based on the bearish mother candle of February 2021, is that the next movement that we should be expecting is a potential upside movement for prices at 1753 current price to actually go up and touch at least that line of 1772. So there should actually be some buying opportunity that's present. Of course, in terms of trend, it's not really clear as yet, but current activities of buyers and sellers could predominantly be on the bias of buying as opposed to selling in a bearish zone. So even though we are at a bearish zone, this potential movement to the upside could actually be a type of correction. So there is an opportunity to actually ride the corrective move of gold at this moment of time. If we're looking into the daily chart as well, if we go on to lower time frame, then this could actually be looking at similarly, we could actually see that there may be a potential to the upside, but a potential or possibility of a reversal at this 200 EMA line as well, because all these lines, either the 50, 100 or 200, could also be either a support resistant line. Now, because it's to the upside moving upwards, then we are looking at the potential of a reversal based on this blue line here. So here, for example, if I were to just draw out a line right there on the 1 hour chart and zoom out, you see, based on that line, we could see that we have got some resistant area. We need to mark the opening price of that mother candle, closing price of that bullish mother candle as well. Now, this is only on the 1 hour chart. To get more data, we go on to the 4 hour chart, and we can see that we have got a very significant mother candle right there with the opening price here, right? So, and then we can see there's another one right there. So if I were to move this one down here, okay, now this could be a better resistance level, because a resistance level that is based on opening and closing price of the mother candle is usually a little bit more powerful and sharper as well, just to demonstrate that. So I'll get rid of that one there. Now we've got a bit of a space at the moment for prices to go upwards before it reverses at the 1758. So in my opinion or suggestion is that there may be a bit of a room to go upwards as a corrective move, but be careful, and basically the exit price should be before the 1758. Now, will there be a reversal? 100% to know it, it's always impossible, but there are hints that you can actually get whether or not we will have a reversal of prices coming down more of gold when we actually apply the stochastic. Now, when you apply stochastic with not changing any of the parameter, we want to look for divergence, which is the opposite movement between the prices on the candlesticks and the oscillator, the stochastic itself. So what I mean by that is we want to look at the peaks or the highs and the lows, basically. So here, for example, we have got a low here and we've got a higher low here, right? So if I were to draw that here based on candlestick, that is the slope to the upside for the candlesticks. But then if we apply that similarly based on the stochastic, then you're looking at a downward type slope here, where you've got a lower low instead of a higher low right there. So that itself marks a divergence. So that divergence has to be taken into consideration, or just an expectation of a possible reversal, okay, of the current trend. Hence the reason we have got that movement to the upside. Now, the other thing as well is if I were to zoom in, okay, if I were to zoom in and look at the daily chart, and I can see that it's moving to the upside and it's got the potential of reversing at 1758. But in my opinion, it could actually it could actually reverse slightly earlier than that red line as well, if we were to consider that bullish candle to the left. If you guys can see, you've got a bullish candle to the left here, right? And this is quite a significant bullish candle right there, with a strongish type body, right? And it's got that closing price right there. So we need to mark this closing price as well of this mother candle as a potential area of a reversal as well. So sometimes we tend to use the wick and the closing opening price of the candle as well to mark a zone, right? Like a resistance and a support zone. But it would be sharper and better as well to actually look at previous candle, but look at not only drawing the line based on closing or opening price of any candle. It would be probably better to draw your line of, based on the opening price or closing price of a significant mother candle. This is a really important, right? So for example, obviously, it's really easy visually to compare, right? A biggish, longish body of the candle right here compared to this one here. This one here is a little bit longer than this bearish mother candle. And of course, this one here, visually itself looks a little bit shorter, a little bit less in terms of selling power if you compare this body to this body, or even to that body. So it's just keeping things really simple in the preliminary stages are really very, very important, very crucial. So we don't get to an over analytical mode, because we cannot get to that mode, because we've got a long way to go. We've got a long way to go into picking up all the other ingredients and having other analytical tool giving us what do you call that, hints and awareness of what's going on. Okay, so there you go. Now back to gold again. Now we have got a bit of a clearer mapping of the price based on the daily chart, because we have got now current price moving at 1751, but we've got these two lines marked at 1755 or 56 area, right up to 1758 area, proving to be significant resistance level, right? So we want to look at what would actually happen to this area right here. Will price actually go up and then reverse? If it does actually reverse, then there's a possibility to come downwards as well towards the 1733. But in its movements, it looks like it is creating more of a sideways type move, okay, based on the uncertainty or non-clarity of trend, as well as the non-strength of the downtrend at the moment. So there is no direction at this moment that is clear for gold. We need more price movements, especially I guess once the symposium have started tomorrow or late tonight to actually have some news about the symposium, about views and opinions before the symposium, and then we will have news and opinions and everything else during the symposium and also later on after the symposium. So we need to follow through that because fundamental analysis, news happenings or natural disasters and all that comes under the category of fundamental analysis because it's out of the chart. But then these events or speeches or any type of events that could actually move the market and create volatility and stuff like that would actually be the fuel to the movement of the market. All right, and also the fuel to create the continuity of the trend or to create a new trend as well and to encourage a reversal, right? Okay, so there you go. Any questions, guys? Any questions at all? Give me a second. Thanks. Any questions, guys, from you guys? We'll look at another currency pair. I will look at a currency pair as well. I just thought we can give you some hints of the candlestick and the opening price, closing price analysis that could actually be applied to any instruments as long as you're looking at candlesticks or the candlestick chart. Give me a second. Let me just send a very quick message through. Any questions, guys? I'm waiting for questions from your end. No questions? All good so far? Now, I've got a small thing to also highlight to you guys. I like drawing and spotting patterns, as you guys know, and various type of patterns. You've got harmonic patterns, geometric patterns, and the usual most popular just price patterns. And these price patterns or chart patterns, we call it, could be the ones that you guys are quite familiar with, you know, hearing them like the double tops, triple tops, double bottoms, triple bottoms, maybe the hidden shoulders and various other or inverse hidden shoulders. We've got one that's called the cup and handle pattern. Now, this one here for gold, we have got a short type term cup and handle type roughly pattern that does actually mark a downward type move actually because it needs to create the handle of the cup. This is the U-shaped body of the cup, and then it needs to come downwards at least by 50% of that cup. So 50% meaning from the top of the cup to the bottom of the cup, and then you can use Fibonacci to measure that. So if we go from bottom to top, then you can mark the 50% based on this type of candlestick, this type of chart pattern, which is a cup and handle pattern. So here, for example, there is, from the perspective of pattern, we may have a support level for it to actually come down to the 1748 area if it does actually reverse a little bit. But then this cup and handle usually gives us a bit of a hint of a possible uprise of the price after it creates the candle right here, the handle of the cup right here, it would reverse upwards and then burst upwards from the mouth of the cup itself. So that's basically from a perspective of the cup and handle pattern. And this handle, this cup and handle pattern, you can actually also look at it in the 1 hour chart. So it's the same thing there, the 1 hour chart. And if we go on to the 4 hour chart, then it starts to disappear. But that also gives us a bit of a hint of how you can actually trade with price pattern. But you are also gathering information from various perspectives until you get a clearer picture as well. So one pattern could actually be amalgamated or connect to another pattern, another pattern, just to give you that whole range of the picture, like a puzzle pieces type scenario, where you can actually look at all these things as little puzzles, pieces put together to give you the big picture later on, right? Okay, guys, questions from your end, please. If you guys have got any questions. On the daily chart, for example, the patterns start to, it starts to give us a possibility of other patterns in the works as well, working relationship with other patterns, of course, that we spotted on the shorter time frame. So in the shorter time frame, for example, we have got on the 30 minutes and the 1 hour, we have got a cup and handle pattern that signals possible small fall, but then the overall trend is to the upside potentially for gold, right? Now, with that scenario, when we look into the daily chart, we have got a possible pattern that is a geometric ABCD pattern to the upside as well. So that then gives us the potential uprise of gold potentially to the upside, giving us some hints like this. So we've got a normal usual ABCD or common ABCD pattern right here. And in order for us to convert that into a geometric pattern, we need to draw an extra line from point A to point D. So that's your A here, B is here, C is here, D is there, right? So the D of the common ABCD pattern is giving us a bit of a hint that price could, right, not will, but potentially, if it is on an uptrend type movement, then it would most potentially be able to actually go upwards to as high as the 1855 area, right? So $100+ up. So then this basically gives us the ability of spotting where the entry price could potentially be using the geometric ABCD pattern. So when we do a cross, for example, the safer area to start aiming for the buy would actually then be at the crossover between the BC and the AD. So I'll mark that as a yellow thicker horizontal line right there. Let me just do that here. Okay, so then we go on and we do it like this. Okay, let me just give me a second. Guys. All right. So now that that suggestion based on the centroid, I call it, which is the axis, the cross between the AD and BC line, is your potential suggested entry. So the entry should actually be only above 1768 to give you that better sort of how do you call that, probability of entering the trade using the geometric patterns style of doing things. Also, I would mark certain areas, for example, like this one here, potential resistant area, of course, based on that as well. So we've got an area, a buy area there that can be marked. So I would actually then, shade it up to make it zones that we can actually trade later on, like buy zone, sell zone, and stuff like that. So these are all potential areas that we can start marking as of now, just so that we are aware of areas that could actually prove to be potential buy or sell zone like that. So that's the potential buy zone there, which is anywhere between 1768 area right up to the 1800s area. Okay, so 1800. So 1768, or we can say 1770 area right up to 1800 area. So we can always keep an eye on that. Can actually be a pending order area as well, because sometimes we don't want to actually miss out certain big burst of it based on news as well and stuff like that. So hence the reason we need to actually monitor it from short term, intraday, medium, as well as a long term. But this is sort of a potential area if at all we are looking at a burst of an uptrend or a burst of price to the upside for gold, especially. I mean, in response or in reaction to what would actually be going on relating to the Jackson Hole Symposium, inflationary situation, bond buying, selling as well, and various other things. Okay. All right, guys, questions, please. Any questions before we end the session? Because your questions would actually then, pave the path towards more clarity on your current trades as well. And then you will be explained, from different angles, and you'll be learning more. More questions you have, the better. All right. Got another area of a buy area right there as well. So mark it again here. So this is what I mean by trading in stages as well. So once you've got a bigger time frame to map out your areas that you can actually trade for a buy within a buy zone or a sell within a sell zone, then you can actually go back to, go back to lower time frames to actually then trade on a shorter or medium term as you want. But the bigger picture is always really crucial, so that you get to trade it, potentially better as well. Okay, so here. Okay, there you go. So we've got this tool here. Also, what we want is, the moment prices have actually triggered the centroid area, then it would be a higher probability of the price movement to go to the upside as well. More participation. Right. Daily chart. Let me just. Okay. Let's see. There's a W type pattern right here as well. It could be part of a harmonic pattern as well that could actually marry up very nicely with the geometric ABCD pattern as well for gold. Okay, guys, questions from you guys. If you have no questions, then we'll end the session for today and continue and basically see you guys again on Friday. Any questions, guys? Toby, if you got any questions, perhaps the team is a little bit shy as well. You can always help out. No questions? All good? Got another area right here. Let me just keep marking them, so we can see how price would actually be playing in within the zone that's been marked as well. Okay, there we go. All right. Okay. There you go. It's a bit clearer now on the mapping side of it. I like to map it based on price as well. this marks your bullish areas that you can actually consider buy at the bottom and then exit before the top there, and then re-enter into the next blue zone, and so on and so forth. So we've got three marked blue zone right here, giving us the potential of this is if at all it bursts to the upside and bias is on the upside, and basically triggered by the Jackson Hole Symposium. All right. Okay. All right, guys. I think that's all we have. We've got quite a number of things that we have discussed and could actually be applied onto any of your other instruments or analysis of any other trades. Okay. No questions, guys, from you guys? Very quiet today. Meantime, we can always check onto some news as well on Forex Mirror. So we've got a lot of hot stories revolving the interest rates right there, also hinting the Jackson Hole, event, crypto market as well, NZD, talking about NZD USD. We've got ECBs concerning the Eurozone. We've got still USD CHF. If we click on to the Jackson Hole clues, it's just talking a lot about Federal Chair Powell as well. Chairman Powell's, take on the inflation and economic outlook of the U.S. So there's a lot of things that would actually be hinting the market from today onwards, especially when the Jackson Hole Symposium starts tomorrow. Okay. So here they talk a lot about anxiety of the markets leading up to the Jackson Hole. They're talking a lot about investors and traders. As you can see, they're all awaiting on policies, next policies that will actually be announced by the Federal Chairman Powell, and various other things. So yeah, it's going to be, in my opinion, or personal opinion, to be quite a volatile week because of things that are to be expected from the symposium especially, right? Okay, guys, I think that's all I have for you guys today, and we shall end the today's session. And any questions at all, you guys can always send me the questions and we'll take it from there. All right, guys. First and foremost, thank you very much for attending my webinar today. We'll see you guys again on Friday. Any questions, push them through to either me or Toby, and we will take it from there and guide you through. Okay, guys, take care. Thank you very much, and we'll see you guys soon on Friday, the next session. Take care, guys. Bye-bye.